Hi, it's Ashik here. Welcome back to my channel. Today our topic is manufacturing account. In this lesson, I'll show you how to prepare an income statement. So let's get started. Okay, so before we start preparing this income statement, you need to know how to prepare manufacturing account. So in my previous video, I explained how to prepare manufacturing account. If you did not watch that, I'll link to this video in the I button. You can watch it, okay? Because without learning manufacturing account, you cannot understand this income statement, okay? These are linked up. So here our first item is sales revenue, yeah, as it is our income statement. So look at the question, what is written? So revenue is here 755,000, okay? Then what to write? You know, we have to subtract cost of sales, yeah? So right here, less cost of sales. Okay. So how to calculate cost of sales? First of all, we need to write opening inventory, yeah? So let us write here opening inventory of finished goods. 10 values given here, $37,000, okay? Then we have to write cost of production. So right here cost of production. This value will come from the manufacturing account, which I showed in my previous video, okay? So what is the value here? Cost of production, it is $430,800, okay? Then what to write? Look at the question, it is purchase of finished goods, yeah? Purchase of finished goods. Okay, $135,000, okay? Then what to do? We need to add. By the way, if we have purchase return of finished goods, then obviously we have to subtract this value from this $135,000, okay? So now we add these three. Our answer is 600, $2,800, okay? Then what to do? Then we have to subtract closing inventory of finished goods, yeah? So right here, $41,500. So if we subtract, what is answer? It is $561,300. So this is the cost of sales, okay? So if we subtract cost of sales from the revenue, what we'll get? It is called gross profit, yeah? So subtract this cost of sales from here, then our answer will be $193,700, okay? This is gross profit. So right here, gross profit, gross profit. Okay, look at the adjustment number 8. What is written? A debt of $3,100 was recoverable, okay? So you will not get it back. The provision for doubtful debt is to be maintained at 5%. So now we need to calculate this value on trade receivable, yeah? So look at the trade receivable. What is written in the question? Trade receivable. It is written that $63,100, okay? So from here, $3,100 is not recoverable. So you have to subtract this one. Okay, so if we subtract, what is your answer here? $16,000. Okay, so on this value we have to calculate 5% in the written in the adjustment. So multiply by 5%. What is the value here? $3,000. But already we have here provision for doubtful debt in the question, which is $3,500. So $3,500 already given in the question. Okay, so if we subtract, it is $500. That means $500 is already decreased. Okay, so when provision for doubtful debt is decreased, we have to consider this value as an income. Okay, so let us write here decrease in provision for doubtful debts. Okay, so it is $500. Okay, then what we have? We have one more item here, which is rent receivable. What is the value here? $3,300. So right here, rent receivable. The value $3,300. So if we add this all with the gross profit, our answer is $197,500. Okay. So let us write here less expenses. Less expenses. Okay, what are the expenses given in the question? First of all, we have building maintenance. Yeah, so let us write building maintenance. Building main. Okay, so what is the price for building maintenance? So building maintenance is here $31,000. So $31,000 from this value, already $25,000 is taken. So now we have to write here $6,000. Okay, if we subtract. Okay, then what we have? We have here rent. So let us write here rent. So we had an adjustment about rent, that 50% for administration. Okay, rent is here $24,000. So let us write 50%. So already 50% is taken to the previous question, which is manufacturing account. So if we multiply, it is $12,000. Okay, then here we have insurance. Okay, what is our insurance? It is $9,800. So let us write insurance $9,800. Same 50% for factory. So 50%, rest 50% will come in this account. So if we calculate, it is $4,900. Okay, then we have here in the question selling expenses, yeah, which is $18,500. So write selling expenses $18,500. Okay, look at the adjustment number 4. What is written? Selling expenses of $1,400 were prepaid, means advance. Okay, so let us write here $1,400. If we subtract, your answer is $17,100. Okay, then what we have next? Yeah, we have other operating expenses. So let us write other operating expenses, $32,300. Okay, next we have the depreciation of fittings, yeah, office fixtures and fitting. Okay, so what is written here? Look at adjustment number 7.2. Office fixtures and fittings at 10% using at straight method. That means just you multiply the rate with the value of the cost. Okay, so what is the cost value here in the question? It's given $18,000. Okay, then one more adjustment you have here. Look, number 6. Office fixtures and fittings costing $5,000 had been purchased by check. No entry had been made in the book. So one more fixture is purchased, which is $5,000. So at this, with the cost, if we add, it is $23,000. Okay. Now you multiply by the rate of depreciation, which is 10%. Then your answer will be here, $2,300. And depreciation is very easy, yeah, to calculate. So now let us write here depreciation. Depreciation of fitting. Okay, $2,300. Now what we have? Yes, we have one more item. Look at the adjustment number 8. If a debt of $3,000 was considered irrecoverable, okay, that means it is a bad debt. You will not get this value anymore. So right here, bad debt, $3,100. Okay, then what we have? Yes, in the question we have one more. Administration salary, $71,400. Administration means office salary. Yes, it will come here. So write administration salary, $71,400. Okay, so we wrote all the items here. Now we need to calculate. So if we add this all, what is your answer? It is $149,100. Okay, the addition of this all expenses. Now we subtract these expenses from this gross profit plus incomes. So what is our answer? If we subtract, it is $48,400. Okay, so what is this called? This is called profit for the year. So right here, profit for the year. Okay, so this is our final answer. Okay, very good. So this is all about this income statement. It looks like kind of complicated, yeah. There are a lot of adjustments. Yes, in manufacturing business, manufacturing account, you will have a lot of items, a lot of adjustment to adjust with the respective items. So you need more practice. If you practice more, day by day, these things will be easier for you. In my previous video, I have showed you how to prepare manufacturing account, and here today I'll show you income statement, and in my next video I'll show you how to prepare the statement of financial position, which is also called balance sheet. Okay, so this is the complete package of this chapter. So this is the base, the foundation. If you understand these 3 questions in these 3 videos, and then next time whatever questions you will get, it will be easier for you to understand, to prepare. Okay, so please subscribe my channel for more new videos and share this lesson with your friend, and I'll see you soon with new videos, and until then, bye bye and take care.